to 95% of all crypto is wiped out. I mean, think about the dot-coms, think about what went on there. So many crappy dot-com companies got crazy valuations. Eventually, they kind of went away. And then the best of breed, the Amazons, the Googles, the ones we always talk about that are the biggest companies in the world, they're the ones that survived, and then they thrived because there was less out there for investors to go into. And I think that's very key for cryptocurrency.
So let's start with Bitcoin, which has managed to bounce back after crashing to an 18-month price low over the weekend. Gareth, what is going on?
Yeah, so wild movement in crypto markets, wild movement in stock markets. I mean, bonds, we know the bond market has been crazy with yields. But bottom line is, when you look at the crypto market, it did exactly what it should have done. And I know that sounds weird to people, but the charts really give us insights. They give us the probabilities to kind of decipher what the likely outcome is. And I remember last time we talked about this bigger down move from 69,000 to about 33,000, and then how you got in this sideways choppy kind of consolidation pattern in cryptocurrency. And that's, if you look in a textbook, that's a standard bearish, channel pattern, bear flag pattern. So what that tells you, and by the term bear, we know that more than likely it was going to break down. It did just that, and it came down sharply, basically tagging 25,000 on the charts. Now, one thing I will show you, which is just so cool, and this is just how cool the charts are, but if we go to another channel, and I love my channels, as you guys know, and we flip over to it, and if we just connect this high through right here, so right now this high, nothing in the chart has changed. So 20,000 is just the high end of my target down. And again, just to understand where that's coming from, it's coming from the 2017 high at the lower end. I believe that we have to get that hit, we have to retest it. So it's amazing how these charts show us, but I actually ended up going long on Bitcoin right down here just for a trade. Is hiking not a long-term investment. There's just for a trade based on the fact that we've never had a period since Bitcoin's inception where there wasn't some sort of QE going on, right? Well, now they've sucked that out. They've taken that away. They're reducing their balance sheet and they're raising rates. So it implies that we should have a bigger correction than usual. The other thing that I'd love to show you guys is 20,000 is the high end of my target. The low end is actually down at 12,000. And the way I'm getting that 12,000 target, if I make this chart here zoom out properly, is basically if you look at this move down from 69,000 to 33,000, that's basically a vertical drop of $33,000. And if you take this high here at 48 and drop that same 33,000 down, which is what's called a measured move in technical analysis, you get $12,000. And what's even more fascinating is that if you look at previous cycles, like 2017, when it topped out till the end of the bear market, in 2013, Bitcoin corrected 80 to 85%. Well, guess where 80 to 85% is? It's right around 12,000. So 20,000 is my high end, and 12,000 would be my worst case scenario correction on Bitcoin.
12,000, sorry, in what time frame could we see it go that low? Would it just happen quickly or over a few months? How fast does that happen?
Yeah, so past cycles usually from the highs, so if you go back to November of 2021, it's 12 to 18 months. So we're already over 6 months into that, which implies give or take around 12 months more until we reach the bottom. But I do think that what'll end up happening is it'll be when fear gets to that level. We know fear is very pervasive. It'll be a fast move down, and then my guess is you'll get a bounce off that lows, but it'll chop around after that for a while until the next bull market takes over.
Okay, so the question I'm getting, and I'm sure you're getting, and I know you're not here to give financial advice, but folks who do have a large position in Bitcoin, and if they're hearing this forecast of 12,000, they're saying, should I just get out now?
Yeah, so, and it's such a hard question to answer, because I think it's important to be clear is that I do not have a magic 8-ball or a crystal ball. So, there's no guarantees it goes to 12. I mean, heck, there's no guarantees it goes to 20. So what I generally recommend at this stage, now that it's down from 69 to 29 or so, is that you start thinking about, okay, I missed selling at the highs. That's one thing, you can't undo that. Instead, think about, do you still believe in the long-term cryptocurrency cryptocurrency story, the long-term Bitcoin story. And if you do, then what I would recommend is dollar cost averaging slowly. Nothing crazy, but every $3,000 or $5,000 down, have a standard amount that you've already set aside and say, okay, I'm willing to put a little bit more in to bring my overall average down.
Okay.
And this way, you'll have that exposure. If it just goes to 21, doesn't even get to 20, you're exposed. If it goes lower, you get a lower average. I think that's the yeah. If you believe in that long-term case, and remember, you always have to reanalyze that. What I suggest is every month, re-asking yourself, is the thesis still valid? And as long as it is, then I think overall, and I do believe in Bitcoin longer term, I think that you will be rewarded if you hold, and you hold through this pain. But I think it's also important to understand is that in 2017, when we were at the lows, people were talking about Bitcoin not surviving. And you have to be ready to weather that emotional kind of nature that's going to be very, very inbred in a lot of people. You're going to see people writing crazy things on social media, and you have to really be able to block that out and stick with your thesis unless it changes.
So how much of this is due to the shock therapy that we're seeing from the Fed, Gareth? And do you think that certain myths are being busted right now, like the fact that Bitcoin shines in times of inflation?
Yeah. So that was always a myth, right? That it shined in times of inflation, because we never really had inflation since the beginning of Bitcoin, right? It was always 2% or lower until now. And you've gotten in a scenario where, I do believe long term it is the digital gold. I truly do. And that's when I will accumulate a large position when it gets low enough for me. But I think it's also important to recognize that, Bitcoin's been around since 2009. It's only a 13-year-old. And think about it in logical terms. Like, for those of us that have kids, is a 13-year-old thinking logically, or are they very erratic, right? It's not mature. Like, the gold market has been around for thousands and thousands of years. It's very mature. You don't see big moves in gold, maybe 1% here and there. It's a very mature market. So eventually you will see Bitcoin mature into a much more stable market. But right now it's still being bought and sold by people panicking and being greedy and all this craziness. And it's still a very young asset.
Right. It just makes me, when you said that, I just think of gold as grandparents, and sometimes grandparents know best, right?
Yeah, that's right. Absolutely.
Okay, this is all happening, the correction in the crypto space, while El Salvador is hosting 44 countries today to discuss the merits of cryptocurrency and the benefits of adoption. Could this event not have come at the worst time, you think?
Yeah, I mean, it's definitely going to make, when you have big movements like this, it's very hard for countries to say, okay, let's adopt it as a currency for us. Because again, if one day it's worth this and the next day it's 20% less, well, again, how do you make sure that the exchange rate and what people are buying with it, I mean, it just gets very, very messy. So this is, again, something that I think is a positive step in the right direction. You want people talking about it. You want world leaders talking about it. But at the same time, it needs to calm down before we get to those next steps.
Okay. I don't want to stay too long on Bitcoin because I know we have a lot of other stuff to get to. But how long, and I know I've asked you this in the past, but the people want to know, how long does this winter, how long does the pain last? How long must they endure this?
Yeah, so I'm in the camp that all we can do is look at past cycles. Now, again, it's important to understand that this is not necessarily like a past cycle in Bitcoin or a bear winter or a crypto winter, because we have the Fed doing what they're doing. But in general, 12 to 18 months from the highs. So I would again say generally another 12 months. The only kind of caveat here is, and this is my one worry, is that if you look at Amazon in the .com bubble or the NASDAQ, after the 2000 collapse, it actually took 15 years for the NASDAQ to take out the .com bubble highs. I really hope that doesn't happen, because that's a really long time. But as a technician, it's important to look at all angles, even the ones you don't like or you don't believe in, just because you have to be informed. You have to know all this stuff. It has to all go into your algorithm in your brain about your decision making.
Yeah, I want to talk the Terra coins, okay? Terra Luna and Terra USD, just absolute destruction. Terra coins, okay? Terra Luna and Terra USD, just absolute destruction. And speaking about myth busting, stable coins not so stable, can we
And by the way,
bust that myth?
Yeah. Man, and by the way, I think that what happened with the UST, the Terra Luna
Yeah,
stablecoin, it's such a disservice to cryptocurrencies because everything about crypto right now is trying to get people to trust it, to adopt it,
right.
you know, and when you have these situations, it is very, very bad. I hope that good things can arise from this, meaning that you do need governments to come in and have some sort of regulation to prevent things like this happening again. And I think that could be a long-term positive. Maybe something like this needed to happen to get that regulation going. And I know a lot of people in the crypto markets are like, oh, I don't want any regulation. But you have to. If you ever want it to be a dominant force in assets,
Right.
crypto needs forms of regulation. For instance, like one of the biggest things to me personally as an investor is that in an investment account where I trade stocks, I'm FDIC insured. In a bank account, I'm FDIC insured. You don't have that in crypto accounts. So if someone, you know, hacks in or makes you click a link that they steal your money, it's gone. And that is very disconcerting for people like me that I want to put a lot of money in. But I mean, God forbid I click a link by accident and someone just takes my money and runs. So you do need the right steps to be taken here. And when that happens, I'm hopeful that that's a positive.
I mean, just a few months ago, they were enjoying this honeymoon phase, and it's like, what happened?
Yeah, I mean the Terra Luna collapse was insane. You know, to see one of the top cryptocurrencies go to
Yeah.
now hundredths of a penny. But again, understand what they do, and this is actually an important point because a lot of investors are like, oh, let me buy it down here. I mean, people were buying it at 10 cents, thinking, oh, this is a great, you know, it's going to have a snapback. But please understand, they're doing the same thing as they do with stocks, where they dilute, they issue shares to try to shore up the UST, the stable coin. And so basically, I think you went from like 300 coins of Terra Luna to like billions and billions and billions. And so it's very hard for a stable for Terra Luna to actually bounce back significantly when they're just printing more and more of it.
Do you think this just builds the case that if there is one cryptocurrency left standing, it's just Bitcoin?
Yeah, I mean, I think that, again, that's the one that most big money and institutions are focusing on. I think Ethereum has that shot as well because it's the biggest one. But I really, truly believe that it's going to be a healthy thing to happen, but you have to see 90 to 95% of all cryptos wiped out. I mean, think about the dot-coms, think about what went on there. So many crappy dot-com companies got crazy valuations. Eventually, they kind of went away. And then the best of breed, the Amazons, the Googles, the ones we always talk about that are the biggest companies in the world, they're the ones that survived, and then they thrived because there was less out there for investors to go into. And I think that's very key for cryptocurrency. It's almost like a rite of passage.
Gareth, if you don't mind, let's pull up Ethereum. You mentioned it, down 50% on the year here as we're speaking.
Yeah, so I mean, I have some trend lines here. You know, basically, you know, I bought off of this lower range right down here based on major support. This upper line is resistance. You can see we just kind of kissed it and pulled back a little bit. I do think Ethereum has more upside, likely back to about 2,500 in the near term over the next week or two. But again, you know, I'm in a position where I'm looking at a bigger breakdown on the chart, and this is very, very problematic. And let me draw this trend line in for you guys. Is this trend line was such a good trend line until it broke. So see how for basically going back to early 2021, you kept on hammering and hammering and hammering, and then it broke. And once a trend line like this breaks, it's very hard for it to get back above this range. And ultimately, it may have bounces, but then the next leg lower comes in. So unfortunately, I think, I mean, at a very bare minimum, just like Bitcoin going back to the 2017 highs, I'm in the camp that you're likely headed back to about 1,400 at minimum on Ethereum. Just remember, right now we're in a Fed-induced bear market. Eventually, I think a recession later this year into 2022. So bounces should probably be selling opportunities both for crypto in the near term as well as stocks. Lots of opportunities because we get wild swings. But again, you have to be a nimble investor at this point. The days of buy and holds with 3% pullbacks because the Fed was always there to rescue, at least in the near term, are over. You have to recognize that. The faster we recognize it, the safer we will be.